With everything that's going on in the world today, the demand side fundamentals for the gold market have never been stronger. But what about the supply side factors? Are they as positive? Do they support a bull market for gold? To answer these questions, I'm joined in this episode of GoldCore TV by Amir Adnani, President and CEO of GoldMining Inc., who is obviously a fan of gold, but I also, for a change, talk about the emerging bull market and opportunities for the other yellow metal, uranium. And remember, as always, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit your notification bell now. And if you want to learn more about how you can buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts. Amir Adnani, welcome to GoldCore TV.
Thank you for having me, Dave.
Now, you are well known for being a fan of both yellow metals. That's gold and uranium. Now, uranium is not something we normally talk about on this channel, but I do want to touch on it a bit later on. But with the keen interest in our community in gold, you as an entrepreneur have some strong interests in gold and in the gold mining sector. And we don't often get to touch on the supply side factors influencing the gold market. So it's great to have this opportunity to do that with you now. So I'd like to start and just ask you, what are the key supply side factors that underpin your continued interest in the gold market?
We had a decade-long bear market in gold. There was underinvestment in exploration and development during that period. The bear market in gold started in late 2012 and really lasted until early parts of last year. During this period, the major gold producers were focused on reducing debt. And what that meant was exploration development budgets were non-existent. By deleveraging their balance sheets, they were able to really improve their financial health. But the mining business is all about having a pipeline of future deposits that you can mine. Without reinvesting in exploration and development, mining companies always run the long-term risk of supply chain issues, supply chain risk, and pipeline of resources and reserves being depleted. And so today, the total resources and reserves, which is the pipeline for the gold mining industry collectively, is at a decade low. And no surprise, after a decade of underinvestment, that's exactly where you land. Now, introduce into the mix the fact that because of the pandemic, because of variety of supply chain disruptions over the course of the last year and a half, and as we speak, and due to a very tight labor market, it's difficult to find people to work at the local coffee shops. It's difficult to find people to go work at a mine. There are a whole new sets of challenges facing the gold industry, in my opinion, and the mining industry moving forward, because this is an industry that is capital intensive, people intensive, material intensive. It's a big earth moving operation. When you think about what the mining industry is, it's absolutely fundamental and vital to what we do in terms of advancing various other industries. Everything that gets mined is supporting some other industrial development. And of course, gold plays a very important role as a financial asset, as a currency. But again, we're in a world right now, Dave, where I think the challenges and faces associated with COVID haven't yet been felt in the mining industry, because this is an industry where things happen over a long time. And these types of issues around supply chains, I think, will have long-lasting impact in mining and building new mines. And that means higher commodity prices, higher gold prices, higher uranium prices, higher oil prices. You see copper at an all-time high. And of course, they're also reflecting inflation. There's real inflation in the world. You can call it transitory, but if you define transitory, can anyone tell me what transitory, does it mean 3 months or 3 years? So the reality is, regardless of where you fall on that, and I'm fairly certain it's longer than 3 months, this whole transitory business, we have real inflation, and commodity prices are an ultimate truth-telling machine. in capturing real inflation, reflecting it in the commodity price. And that's actually what excites me a bit about the gold price. I think the gold price hasn't yet properly reacted to what we're seeing in terms of this rampant inflation out there. And that's actually making me fairly bullish about the gold market right now. I think it's probably one of the most undervalued asset classes today relative to the world's economic conditions and these physical challenges and realities that it is facing every industry, including mining.
So we've got issues on both the supply side and the demand side. So we've got a decent supply-demand imbalance going on that you think is set to continue. If we park the COVID-related supply crisis that we're going through at the moment, is there a longer-term issue then with the underdevelopment of these mines and the pipeline of gold and silver? I mean, traditionally, what are we talking? What would a company normally expect to have? A pipeline that lasts for a year, 2 years, 3 years, or what would it be?
No, mining companies are expected to have pipelines that can last for 10 years and longer, because the upfront capital requirement is substantial in mining. You're talking about hundreds of millions of dollars of upfront capital that goes into building mines. So no one's going to commit to doing that if the visibility out in time is only a couple of years to recoup that capital and to have a sufficient return for investors. Deposits need to be 10 years plus in life. Add on top of that the fact that we now have greater participation in the capital markets by investors that have an ESG mandate, a focus and a mandate on issues around the environment, social governance. And the mining industries, I think, traditionally always been very cognizant of this. But what it means is that it takes, and it will take longer to permit projects, regulatory permitting, social licensing, making sure all stakeholders, including this new category of institutional investing with ESG, is satisfied. You're seeing the big gold producers now needing to talk about their own net zero pledges. How do you also address the issues around decarbonization and reducing your carbon footprint when you're a mining operation and you've been mining gold the same way for decades and decades and decades? All this and so all of it really means more time, more resources, and longer term planning is needed. So there's some really, I think, interesting and fundamental underpinnings to why there will have to be stronger commodity prices, stronger gold prices for many years to come.
And mining stocks have been relatively underperforming over the last number of years if we compare them with the averages. There doesn't seem to be the money that is the capital that is flowing into mining stocks. So is there going to be a bit of a crunch there? I mean, how are these mining companies can they fund this searching for new gold?
I think at $1,700 an ounce gold, approaching $1,800 an ounce this morning, certainly things are looking better than for most of the last decade when the price was below $1,300 an ounce. But the mining stocks, the gold stocks, are trading at equity valuations that reflects $1,300 gold as opposed to $1,800, which tells you sentiment is not very strong right now for generalist investors to come and buy and own gold stocks. Sentiment can change on a dime. It happened last year, it happened in 2016. Look at the uranium sector, where some recent moves in the commodity price for uranium have caused uranium stocks to double, triple, quadruple in a span of 30 days. And this is a key characteristic of the commodity sector and the gold sector. There could be volatility. Right now, I think we're seeing a period of consolidation in the gold price. I really believe that this will be followed by a stronger upward move in the gold price that will drive equity flows into the gold mining stocks, improve financial situations. And I think that's where funding flows come in as companies look to advance and fund projects. But look, you also have an environment this year where companies with the right management team, with the right assets, with the right plan, can attract sufficient funding. I launched a company earlier this year called Gold Royalty Corp, which was spun out of GoldMining, the company that I founded a decade ago. We were looking to do a $30 million IPO. The IPO was multiple times oversubscribed. We upsized it from 30 million to 90 million, right, listed on the NYSE. And since then, we've grown the company, and the company's done very well, despite a difficult gold tape for the gold mining stock. So it goes to show you that there are certainly situations where capital is there for the right team, for the right plan, for the right strategy. But to your point, the gold mining stock should be doing a heck of a lot better. If you told me a few years ago that this pandemic was going to happen and there was going to be trillions of dollars in new debt created, and for the first time inflation was going to be the daily topic of conversation, I would have thought gold, and then asked me to guess the gold price, I would have said something north of $3,000 an ounce. So I'll be candid with you. I'm actually, as a gold investor and I don't want to call myself a gold bug, but I've had a long-term belief in the value of gold as an investment, as a hedge, as insurance, as a currency that one should own. I'm disappointed in where.
And I suppose a follow-up question to that is, given everything that has gone on over the last 18 months in particular, and the amount of money printing that has gone on over the last decade, which has accelerated over the last couple of years, why is it that you believe that gold isn't significantly higher?
I think this is $1 million question. It's a very good question. I'm looking at perhaps the fact that while these conditions were created both fiscally and from a monetary and fiscal policy point of view that would traditionally spell gold going up, this has kind of created a situation and an environment where risk-taking is also rampant amongst investors and day traders, people just sitting at home, working remotely. And when you day trade, you're speculating. And when you speculate, you go where the big moves are. You're not necessarily looking at protection, which is a very key feature of gold. Instead, you go into cryptocurrencies, you go into Bitcoin, you go to these asset classes that have been created with very low barrier to entry, right? A couple of programmers creating a currency, giving it a name and launching it. That's not the mining industry. That's not gold. The reason why traditionally we've always valued having hard assets is because it takes a ton of effort, capital, and time to extract that out of the ground. And then you have something tangible in your hand. Cryptocurrencies, the barrier to entry is so low, but the speculation can be so rampant and people are taking risks. And I think it's the environment of the last year that has really created risk-taking in a way that has taken attention off of gold. I think when you're attracted to gold, you're attracted to gold because you've seen life's full cycle. I was attracted to gold personally because I was born in Iran around the time of Iran's revolution over 40 years ago. And I saw over the course of my life growing up how government decisions, fiscal and monetary policy can destroy livelihoods and economic conditions and a currency. When I was born, the Iranian rial to the US dollar was 7-1. Today, it's 20,000 to 1. So 99% of purchasing power has been destroyed. You need to witness that. You need to see that to understand that gold isn't just about making a buck. It's about recognizing that decisions being made out there to debase fiat currencies has long-term implications for your wealth. And that's why you invest in gold. So I think some of that thinking and logic isn't there right now because there's too much greed created in the system, chasing bubbles and chasing highly, highly speculative situations that we're going to look back. And I say, that was the modern days, tulip bubble and all sorts of other, crazy things that have that gold has outlasted, right? Gold has outlasted all these bubbles over 5,000 years because it has the most long-lasting track record and ability of any currency in the world. And that's something that only time, I think you're going to look back and say, can you believe it? We had trillions of dollars of debt and gold was only sitting at 1,700. And we'll have that conversation when it goes to $3,000.
I'll have you back on for that conversation and I'll look forward to it. I want to just switch the conversation up a bit here for a moment, because as you said, you're a fan of the two yellow metals, gold and uranium. Now, uranium is not something we normally talk about on this channel, but it is something that has been hitting the headlines over the last couple of months. It's something that you've been involved in for quite a long time. Maybe you might just give us a 30-second investment case for uranium. What is the current state of the uranium market? What is the investment case?
First of all, uranium as a commodity right now is the best performing commodity in the world so far this year. Right. The investment case for uranium, you hear uranium, you think nuclear bomb, you think all sorts of really bad things maybe, but uranium today has one main application. You put it in a nuclear power plant, it generates electricity. Period. So it's a source of energy and it's a source of electricity generation. That's what uranium is used for. There's over 440 nuclear reactors in the world operating. And in the last couple of months, we have had a situation where there's increasing number of governments that are coming out and basically calling for nuclear power to play a central role in their energy mix moving forward as part of their net zero pledges. You got COP26 coming up, the gathering for all the world leaders to discuss climate issues, reducing global temperatures. The key conclusion is we can't meet our growing energy needs and our electricity needs by just shutting down all the hydrocarbon sources of power and relying on renewables. We need something else in the mix. Nuclear energy is really being singled out as being that key energy transition piece, because it has the ability to generate enormous amounts of power, all emission-free. It's emission-free electricity, and it works 95% of the time. Renewable sources of power work 30% of the time because the sun doesn't shine all the time and the wind doesn't blow all the time. The UK is reported by the Financial Times to be unveiling their energy plan to meet net zero, and a central part of that is nuclear energy. France has now doubled down on nuclear energy. Bill Gates is committing to build small nuclear power, small modular reactors in the US. They've just launched one in the state of Wyoming. Nuclear energy is also playing a key role for space exploration. There are micro reactors that function that are powering SpaceX's missions to Mars and all types of other interesting areas to advance human civilization is being powered by nuclear energy. This all requires uranium. A uranium case is very similar to gold. There was a decade-long bear market in uranium that started for other reasons. It started in 2011 because of Fukushima, the nuclear accident in Japan, which ended up being extremely contained. In retrospect, no one died from that issue, that accident in Japan. People died from the earthquake and tsunami hitting the coastlines of Japan, but the nuclear accident, despite grabbing the attention and a lot of fear that was generated around it, was safely maintained. And we fast forward 11 years later, the concerns and the fear of what greenhouse gases are doing to our environment, millions of premature deaths due to CO2 emissions, and other toxins that are put into our air by burning hydrocarbons. Those fears are and those concerns are far more important than fears of past issues around nuclear energy. So long and short of it is, we're seeing this unprecedented setup for nuclear energy in terms of demand for it, the role it's going to play. This all means demand for uranium. We simply don't mine enough uranium to meet demand. We consume close to 200 million pounds of uranium annually and produce only 120 million pounds. Uranium price has gone from $30 a pound to almost $50 a pound just in the last 60 days. There are a number of investment funds that have entered the market looking to buy and store uranium. This is helping bring a lot of new investment interest in the sector. And the two companies that I'm involved with, Uranium Energy Corp, which is a US uranium mining company, and Uranium Royalty Corp, which is the only royalty company in the uranium sector implementing the royalty model that we've seen in the gold space in the uranium sector. These have been performing really well, both companies and both share prices being up over 100% to 300% in the case of Uranium Royalty. And so we see strong interest in the sector all of a sudden after a decade of again, no interest. And it ties in with the themes of decarbonization and electrification, right? You want to put more electric vehicles on the car, you need more electricity. And it doesn't really help to say you drive an electric vehicle if you're trying to do something good for the environment, is that if the electricity to charge that vehicle is coming from a coal-fired power plant. The truest sense of clean air, clean energy is if you have a nuclear reactor that is an emission-free source of electricity charging an electric vehicle. In that instance, you have a true system that is reducing emissions and supporting ongoing electrification of our transportation system.
What would you say to people who raise a question about the impact of actually mining the uranium? Is that a process that is not environmentally friendly, or?
I think we have to recognize and we have to accept that energy transition, which is this whole concept of utilizing less hydrocarbons and relying more on, again, electric vehicles, doing things in a way that is a transition from how the last 100 years global economies developed, requires more graphite, requires more lithium, requires more copper, nickel, uranium. Anything we talk about doing for 7.2 billion people in this world, on its way, population growth is approaching 9 billion people in the next 20 years, will require more commodities. Now, the commodities that we will need, the metals that we will need as part of 21st century's energy transition away from hydrocarbon are different than the commodities we needed perhaps with greater intensity in the last 100 years. But we have to understand and embrace that we need commodities, and commodities will have to be mined, and that we have to trust the fact that today's Western world, and I talk about the Western world because that's what I'm part of, today's Western world mining industry has best practices when it comes to doing things in an environmentally responsible way, finding environmentally friendly ways to mine, and making sure that the regulatory and stakeholder processes before you build the mine are so exhaustive, they're so complete, and that we have to trust that this can work. And if we don't do that, we're not going to have the necessary elements at our disposal to help with industrial development to push the energy transition theme forward.
As you said, there's been a few investment funds that have come on stream over the last couple of months that are actually also adding to this investment case. We have an imbalance in the uranium market, as you say. There's 200 million pounds of used in 120 mines. We've got a gap there that's filled. Are these investment funds that are coming in and investing in that and storing this uranium, are they increasing that supply demand gap?
I mean, certainly this is demand that wasn't projected before. And so when you have, for example, the Sprott Uranium Physical Trust, which was launched 60 days ago, and it has raised roughly $450 to $500 million that it has put towards purchasing physical uranium. Earlier this year, that wasn't in anyone's demand forecasts until it launched, and that wasn't forecasted, and that's basically new demand that has sucked material out of the market. Just the other day, the country of Kazakhstan, which is the biggest producer of uranium in the world, has announced that they're going to be launching their own $500 million investment in a new physical uranium vehicle to buy and invest in uranium. That wasn't forecasted. That was brand new information just 48 hours ago. And there's been news in the Wall Street Journal about some large hedge funds that have started to also accumulate physical uranium for their accounts as an investment. So you certainly, I think, see that the investment community that sees the stock market at an all-time high, most commodities approaching a new high. Uranium is still 30% of its all-time high. Uranium prices got to an all-time high of $140 a pound in 2007. Today we're at $47 per pound. Incentive price to build new uranium mines is north of 50. So you have a situation where I think people that have studied the sector see great upside profile and exposure. They see that there's the need to really build and expand. The World Nuclear Association just had a report about a month ago saying that development projects would need to double to meet demand. And again, this is the same issue we have in the gold sector that we were talking about. Uranium miners haven't done anything for a decade. Now, all of a sudden, the world wants them to double development pipeline for moving forward. That can't happen with the flick of a switch.
How rare is it as a commodity? I mean, if the price is right, if we see it north of $50 or close back up to 100 or close back up to its all-time high, is there the uranium there to be easily mined to fill that demand?
Academically, uranium is abundant in the Earth's crust, but practically, it is not about just having it in the Earth's crust. Many countries have regulations in place where uranium mining is either not allowed or only available to the state. And so the private sector doesn't have the ability to just roam around the world like it does in copper mining or gold mining. And so the number of jurisdictions you can be is limited. The number of states or provinces that allow uranium mining can be limited as well. It's a specialized metal to mine. And after a decade of underinvestment, that means human resources are thin. And the ramp up of building mines is going to have the same constraints as gold mines are going to have, right? Shortage of material, shortage of labor, and the fact that everything takes longer to permit to build. So is there uranium in the ground? Yes. But the areas of the world that are practically open for business to develop and mine uranium are far less in number than gold, copper, oil, silver. And it's that scarcity and it's that concentration. That's the reason why, for example, the country of Kazakhstan is responsible for over 40% of global uranium production. I mean, that's crazy. Think about it. One country is practically producing half of the world's uranium. And what that means is that countries like Canada or in all of North America, there's only one uranium mine operating. So that means there isn't a very robust infrastructure of people and resources available to quickly react to the increase in uranium price. So again, I think this creates a bullish scenario for uranium prices. That's why we're seeing so much in terms of investments come into the sector, and the commodity price has had a big move here in the last couple of months. But we're still, in my opinion, well off of where the price needs to be to incentivize new development. And then new development will take years before it becomes new supply in the market. And that really, I think, creates a bullish picture. After a decade of nothing happening, things are now really becoming quite interesting and exciting for the uranium sector.
You've been CEO, president of Uranium Energy Corp since 2005. So here we are 16 years later. It's obviously a long-term interest for you, and you've got a long-term horizon on this. So naturally, you see this bull market in uranium lasting for a good long time to come still.
Yeah, I mean, look, I'm putting my money and time where my mouth is. As you say, I've been at it continuously for the last 16 years since I founded Uranium Energy Corp and been in the sector. I just see no other way but to increase the role that nuclear energy plays in the energy mix. I felt that way 17 years ago as an entrepreneur, which then led me gradually to put the foundation together to launch Uranium Energy Corp. And today, again, driven by population growth, driven by the need for more emission-free electricity, clean air electricity, I see kind of an unprecedented setup here for nuclear energy and demand for uranium. And I think the issues around COVID create a whole other layer of complexity around how you can staff up and build uranium mines. So all of that makes me very bullish. But yeah, I'm in a way talking my own book as well. I'm in the sector. I've been in the sector for a long time. But the time I've been in the sector, Dave, I've never sold a single share of Uranium Energy, for example, at a company that I'm a CEO of that you mentioned, or Uranium Royalty. So it shows you the kind of belief and commitment I have, right or wrong. Conviction is high, and that's I don't know if that's good or bad, but it is what it is.
And for our community, for our viewers here who want to take advantage of a bull market in uranium, obviously Uranium Energy Corp or Uranium Royalty Corp. What are the tickers they're looking for there?
Uranium Energy Corp is listed on the NYSE in the US. Ticker symbol is UEC for Uranium Energy Corp. Uranium Royalty Corp is listed on the NASDAQ in the US. The ticker symbol there is UROY, UROY, U for uranium, ROY for royalty. And uraniumroyalty.com and uraniumenergy.com is where there's lots of other information. And on the gold front, my company there is GoldMining, and GoldMining is goldmining.com, and lots of information there on that company. So as you said it, the two yellow metals, gold and uranium, that's been my journey as an entrepreneur with those commodities and those companies.
Well, we wish you continued success. Amir Adnani, thanks for joining us on GoldCore TV today.
Thank you for having me.
Thanks for watching. And if you enjoyed this video, you'll definitely enjoy these interviews with some of the leading voices in financial markets and trading. And remember, as always, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit your notification bell now. And if you want to learn more about how you can buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts.